Welcome to Breakthrough SaaS Growth with the Jasons, the podcast where we cut through the noise and share strategies that actually drive customer-led growth. Each week, we bring you straight-talking conversations on adoption, retention, expansion, and everything in between. Let's get started.
Good morning, good afternoon, good evening, everyone, and welcome to another episode of Breakthrough SaaS Growth with the Jasons. I am Jason Whitehead here in a delightful Washington, D.C. area, and I'm joined by my co-host and partner in crime, Mr. Noble over in London. Say hello, Jason.
Hello, Jason.
Awesome. Thank you so much for that. And today we're excited about this topic, which is, as we've said with Breakthrough SaaS Growth, we're moving into a new direction, not just focusing on customer success. And so today we're going to be talking about the new age of SaaS growth and scaling smarter and not harder. So what we're finding here is, if you remember back when SaaS growth was all about speed, it was bigger ARR and more headcount and faster expansions. And we all just assumed profitability would eventually catch up. Well, that era is over. And today the winners aren't the fastest movers. They're really the smartest scalers. And the big question now is, how do you keep growing while keeping your costs and your structures and retention and customer outcome healthy? So in other words, how do you scale efficiently without falling into the same growth traps that broke so many SaaS models? So let's just jump right in. And Jason, the first question's for you as we get really talking about like the growth hangover. What's really changed since growth at all cost days? And why are so many companies now waking up to a financial hangover?
It's a great question. There's a lot of articles, posts, LinkedIn, X, all about this, and the kind of SaaS models as we had them, and even the customer success models being broken, needing to be reset. I think one of the big things is what we've seen over the last couple of years is that capital is no longer super cheap. Mm-hmm. So it's not freely available. The organizations that are making those investments are looking for. They're spending more time looking at what they're investing in. They're not investing in everything. And I think what that flips is that organizations then are challenged with how do they grow when they can't just scale as they've done before by investing and building new teams. So we've got to start looking at other ways of doing that. And I think efficiency, as we've talked about before, that operational efficiency, way to run things better. And yes, looking at automation and AI is how you do it. And I think what we've seen, this growth at all costs era that we've been through is finished. And I think every investor now and every board for a SaaS company are really pushing for efficient and profitable growth. That's the key thing. It's not growth at all cost, it's profitable growth, and seeing that profit over a shorter time frame than we've seen before. And I think what we're seeing smaller companies, startups, and some scale-ups with great annual recurring revenue, but the underlying unit economics are broken. And right. I've seen this many years back, even when funding was available. What they're trying to do is chase that top line growth, get those numbers coming in, get those customers. But what the problem is that we're just bleeding margin. No one is focused on making sure the unit economics make sure that we're profitable. So there's been a big shift. And I think the big trap, as we've said, is that when you do get investment and you scale headcount and spend really fast, you're outspending and outpacing what your customer value creation is. And that's a really challenging thing. So you're focused more on doing more, but not doing more of what's needed. And I think it's a really interesting scenario that we're in, but you're seeing organizations trying to figure out new ways of doing this. As we said, being more efficient as a way of doing it. Let me throw a question back to you, Jace. How do you, what are some of the symptoms or signs that we see when a company is scaling too fast? And how do you spot when that growth might have turned unhealthy?
Yeah, that's one that I think happens quite often, because it is that difficult balance between where do I invest in my growth and my infrastructure and doing it the right way versus just getting out of control like a drunken sailor. And I think some folks go out of their way where they throw bodies at problems before they figured out how to efficiently solve the problem. Yeah. And like, oh, we've got these 5 new customers. We need to get 2 new headcount for customer success, for support, for whatever it needs to be. And they haven't gone through and said, do we have a scalable infrastructure for a process yet? Do we have the right tools and technology that will allow us to efficiently grow? and doing it the right way as opposed to it's just faster and easier. So I think that's a big one for me is when you see early over hiring. What about you? What else are you seeing that's
I think, I mean, that is a really big one. And I think when you see people kind of putting off problems to be fixed later is another thing. So like you said there, it's we start hiring. I've seen this in organizations where they'll
Mhm.
hire big customer success teams, just keep upping the numbers. The same with sales teams, and it's that growth at all costs. And what you do see is that people saying, "Oh, we'll worry about this problem of systems of processes to be fixed later."
Mhm.
So it's more like a let's get the deal now, and we'll figure out delivery later on. But that's got to change. That really, really, really doesn't
Yeah,
work. And I think you hit those revenue targets, those early revenue targets, but it happens so fast that it's not a process you can repeat. It's not
right.
consistent. You can't scale efficiently doing like that. And I think you also the value that we're delivering to customers and the outcomes get more fuzzy. It's not
Right.
clear what outcomes we're focused on. What does success mean to our customers? And what you do see over time, and quite often over a very short time frame, is really big churn problems. And I think
Mhm.
that's really key here. And what happens there as the consequence of this is that you get a misalignment between teams. So you may get a
Right.
sales team promising one thing, product delivering something else. You then get support being very reactive to challenges that are coming in that they don't know about. And then you've got customer success trying to explain why customers are leaving. So that misalignment and working really, it almost exacerbates the work problem of working in silos. And I think that's a really big thing.
I think you're right about that, and that's been a problem for a really long time, though. I mean,
Yep.
that's not a new problem. I think what's shifting here is there's less toleration for it to
Yeah.
continue. You know,
I think that's the key thing with a lot of this is none of this is new, but what we're
right?
seeing is more of these issues popping up now. And I
Hmm.
think it's been a symptom of investment at all costs, whereas now there's a big push. How do we do this the right way? So the outcome hopefully is that we've got organizations that do scale and grow more efficiently, but are still and it's efficiently but being profitable with healthy margins. And to do that, we still need to deliver the right services and value to customers. So it's a
Yep.
really interesting time. The ultimate outcome could be very good, but it's a change in mindset. I think as
Hmm.
leaders, people are being asked to do more with less and to rethink how they do things. And to your point, how do they focus on systems and processes rather than just throwing people at the problem?
Yep. And it makes me wonder too, because there is a certain amount, especially for early stage companies, of you need to be nimble. You need to experiment to see what's going to work and where the market fit is and where things need to go. And then people, once they start to see some repeatable patterns, they're off to the races. But if the old model doesn't work, and we've talked about some of those challenges and problems that aren't really new, what does healthy growth look like now? How do we change that around?
Uh, yeah, it's really again another great question. This, and I think what we've got to do is what one thing is to look at your hiring. When and how are you hiring? What teams are you hiring for? Are you hiring before your product has a market fit and a stable market fit?
Hmm.
Are you hiring before you're addressing the right customers? You're selling to the ideal customer profile, addressing the right segments. Are you
Yep.
hiring before you've got a true idea of what customer success look like, a true idea of what outcomes look like for customers? And are you kind of just adding on people onto existing teams and just kind of overscaling? Are you
Hmm.
why are you doing this? And I think the really to flip it and look at this new playbook for growth and more efficient and healthy growth, what we've got to do is look at how do we yes, we want the revenue. Yes, we want the new customers, but we also want the customers to stay with us. So we've got to put
Right.
the same focus and investment in time and effort, systems and processes, not just on growth, but on retention.
Hmm.
And get that
Absolutely.
across the board so that everybody understands when customers leave, why are they leaving, and what can we do about this? Have we got the
Hmm.
right processes in place to know when customers are getting value and how do we measure that value for them? As we said before, how do we make sure all of our teams are aligned And with all of these things, I think you've got to be able to measure this growth. We can see it
Yep.
in net revenue retention rates, we can see it in gross margin, we can see it in cost acquisition, and kind of the cost per dollar of annual recurring revenue. So there's ways of doing it. And I think the flip side as well is that a lot of people may read efficient as to let's reduce headcount, let's
Right.
cut the headcount, but it's not. It's more about clarity. What are we doing? Who are our ideal customers? Who are we targeting? Super clear value delivery. What is the value we deliver and how do we measure it? And what's that clear path to renewal? So I think
Yep.
it's not just about financial, it's about how we can protect our company culture, the whole customer experience, and how we
Mhm.
all grow around that. What about your thoughts?
Yeah, I like what you're saying, and I think one of the things that you said that really resonates. It's not just about reducing headcount or the financial piece. It's about eliminating wasting effort and stop getting in our own way. And I think one of the things that I've consistently seen of organizations of all sizes, and you mentioned, is the silo mentality. Sales does sales, and sales at all cost, and we're incentivized for just bringing the numbers, bringing the numbers. And yes, you absolutely have to have sales. If you don't have customers, you don't have a company. But I think you need closer coordination, especially early on when you need to be nimble around sales being aligned not just for commissioned on closing deals, but making sure those deals stay and that they are delivered efficiently and effectively. So that profitability angle. And I'd like to see, better coordination between all the departments, more silo busting, but also so everyone understands how their activities impact the other departments. So, if sales is saying something, they need to understand, well, that's not what the product does, or we can't service it. Or if product is delaying something, they need to understand how that's going to impact marketing and sales. And really just a tighter coordination there. I've seen a couple of companies where they actually said, they go through, and the way they were structured in their teams, they had a salesperson paired up with a support person paired up with the customer success, and they worked in small little islands of three servicing the same portfolio, but they worked very closely so that they were one team and compensated well uh, against mutual survival. And I think, a lot of misincentives are there. And I've seen a lot of other companies where they don't, when they do have a process or they haven't evolved their process, like they're not using their CRM effectively. So sales will use it however the hell they want, when they want, which is good for them and their individual working style, but it means you can't automate things for the customer experience for delivery. You can't follow up with the analytics. You can't do automations that you need because the data's not there. All these other bits and pieces that it's a coordination issue. And if the executives are allowing that to continue, or in many cases reinforcing that, especially if they're like sell, 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 just close the deal. At some point it does fall down on itself, and it actually leads to what you were talking about: slower growth and investors getting very nervous and shaky that you're not profitable. So those are some of the things for me that I think are really
I
key.
think
Is
the point you said there as well, and
Mhm.
I've seen some organizations do this, and some organizations that I've worked with and ones that I've just heard of doing it and seeing posts and things about it. It's this idea of squads,
Mhm.
customer squads. So like you say, you've got someone from sales,
Yep.
someone from product, someone from support success, all working together. And I think exactly like you said, the key is to make sure the goals that we're all looking at are
Right.
aligned, and contribute to those higher level goals, that we're not working in silos. And I think there
Mhm.
is what my hope is that this push for efficiency means that we are going to work more collaboratively across the organization and do things together. And I think that will happen. To be more efficient as a
Yep.
business, we've got to work better together.
Yeah, absolutely. And I think it will get there. And, I think, especially now, as always comes up the rise of AI and these other pieces, there's an expectation that individuals can do more with less. That hasn't necessarily proved true with AI pilots and what things are doing. But I think there's a growing perception that it shouldn't take you as long to do all this other stuff, or we don't need to hire someone. Let's get a bot or a tool or something in here. So I think there's going to be opportunities for more efficiency, but that's not going to change down the fundamental issues of if we have silos that need to be busted, or we have people incentivized for different things and everyone just looking in their own little blinders. I remember a few years ago I did a training for a team, and the team was focused on implementing a new CRM system, and they're starting to get some different fights between the business unit and the subject matter experts in the project team versus the IT folks. And so we did this very simple exercise, and we broke them up. And one flip chart was, what is success for the organization? what is success for your department, what is success for you personally, and so they could all see their different levels of what their career motivations were, what's in their department, and what's going to look good for them. And then the last thing we said for them was what is success for IT in the IT department, and something like on time, on budget, getting this done, data, all, they just had this huge aha, like, oh, a lot of our fights and stuff is because we're working towards different goals. We need to align some of these goals as well too, not just with us, but with them as well. Otherwise, this is just going to continue. And so simple exercises like that can have a huge aha moment.
I think that's such a great thing and an easy thing to do, but it is work as a bigger team, sharing what the goals are you've got and how do you help each other achieve those
Yeah.
goals. And what do those goals mean for the business? What are we ultimately trying to do? We're not trying to be separate. We're trying to achieve the same thing, and it's growth, but it's
Yeah.
successful, profitable growth. So it is that joined up wider thinking is super
Hmm.
important.
Yeah. And, one of the things I learned when I was at university was as well was that the learning doesn't happen in the act. It doesn't happen in the moment that you're doing something. It happens in the reflection. And I think a lot of organizations, they don't take even just like an hour a week or like a half day, once a quarter to say, let's just do a quick little debrief of where we're getting silos, where we're not being effective, where we're not being efficient, where we're stepping on each other's toes. And just take that time, and facilitate the right conversation with the right people to create those ahas and then get some action. So it doesn't have to be a huge lift, but it has to be a consistent lift.
I wonder who does that though. So in an organization, who owns that collaboration? It's easy to say everyone does, but everyone gets tied up in what they're doing. And I've
Right.
I've always said, I mean, for me, one of the great things that customer success should be doing, it is absolutely a horizontal function to
Hmm.
make sure that we're selling what we're building, we're all talking together, we know why customers are staying, but it can't be owned by customer success. Who
Right.
who owns this, making sure everyone's together? And you're right, because if you do this on a regular basis,
Hmm.
it doesn't have to be a big thing. And I think you've got to do it fairly regularly because things change very rapidly, particularly given AI now. You've got to be so
Yeah.
agile. But
Well, I,
who
I think
who
that's
owns
part of
it?
the problem is historically no one has owned it. I mean, you could say, oh, it's the CEO's job, but that's not what the CEO is focused on. And I've advocated for a long time that I think more organizations, need a chief collaboration officer, someone who's focused on keeping our internal teams aligned and functioning well, and breaking down silo busting, updating those processes, updating the goals and awareness. And then you embed it into everything. You embed it into your hiring process, your onboarding process, all the way through that this is how we operate. And that doesn't have to be necessarily a full-time role for someone, but it needs to be an assigned responsibility, and it needs to be assigned to someone at an executive level who has authority to go and do this and to bring groups together and has like skills or like one or two people to support them as a team, a budget, whatever they need. Bring in an outside facilitator because it's really hard to self-facilitate a lot of those discussions, especially if there's some conflict situations that have been allowed to fester for far too long. Um, but that's something I think is as you're looking to grow, you can look at where do we need to get our own act together, and we're no longer going to tolerate these efficiencies, or they're just tripping us.
I think, like you say, we're talking about less funding here, being more efficient.
Right.
I'd be worried about saying we need a new role, a chief collaboration officer. But like you said, it's not necessarily a new title. It's responsibilities that someone needs to take up.
Hmm.
And perhaps in today's typical organizations, maybe it's your chief operating officer. These things sit under their process improvement. Maybe that's a place to start, that role there. And quite
Hmm.
often you find that your chief operating officer is maybe one of the co-founders. So maybe
Right.
that's where it can start, just to start that collaborative thinking. Because I think once you've got it in place, it becomes part of your culture.
Right. Yeah, I think that could be a great place to start, and then as you grow, as needs evolve, if you're a multinational corporation, you're going to need a much more complex and structured approach than you do for a smaller one. I think that for me, the important thing is whoever does it has to have the, like I said, the authority and the awareness, but also the skill set and the aptitude to do it. Because
Yeah.
there's some folks that I've seen that, operations officers, they're very, let's get into the finance and the money and the admin and too low level without the big picture strategy and without being able to connect that it's not just process flows, it's personalities, it's emotions, incentives, it's all the stuff. Who are we hiring for? How are we building out our culture? So there's a lot of components there.
Let me
Um,
bump a question back to you, Jess. You mentioned
yep.
about AI there. Now
Hmm.
let's talk about tooling and systems. At what point, or do you, when do you start investing more in systems, tools, and what prompts you to do it? At what time do you know, right, we need to invest more in this platform, this system? How do you go about thinking like that, particularly given where we are with AI and every vendor out there, new
Yep.
vendors selling AI platforms versus existing big enterprise vendors building in AI? How do you know? And again, how do you know to do it efficiently so that you're not, because the risk is you might have,
Yep.
particularly with AI, you've probably got any CEO, any C levels, probably got tens, if not 20, 30, 40, 50 vendors trying to pitch them tools.
Oh
How
yeah.
do they
Yeah.
know when to say yes and where do they say yes? What are the key areas to start investing in
Yeah.
tooling wise?
That's such a great question because it's one of those you can get along for quite a while in spreadsheets and in Word documents and PowerPoint, those sort of things. But eventually that all tips over. And I think I've actually met a lot of companies where they're like, for their CS department, they're like, we don't have our process and our act together yet. We're not in a place to invest in a CS platform yet. It'd be a waste for us, and we've got a lot of activities to clean up, and our data's crap. So I think part of it is when you're spending more time trying to massage the spreadsheet, coordinate stuff outside of the tools, that you're wasting more effort there, or the data is inconsistent and not where you need it, that you can't use it for AI, analytics, automations, whatever you need to do it for. That's really the sign, like, okay, this has to go. And recognize that um, you don't want to wait until it's completely broken. You want to get you see the trend of where it's going. You want to get just a little bit ahead of it for me, and I think that's usually a good one. But also getting people to migrate new ways of working is a challenge. So like CRMs, I used to work in CRM, and I've seen a lot of you're trying to collect marketing, sales, support, service, now customer success. Getting everyone to play well in the sandbox and to recognize that how they do their job is just as important as how well they do it. And if you're doing your job in a way that prevents other people downstream from doing theirs, you really haven't done your job. So that's a key thing that's hard for people to get their heads around, is that what seems like an easy tool is actually can be a very large cultural and behavioral shift for folks to
Well,
make it
this
correctly.
is exactly what we talked about in the last episode, wasn't it? About
Yep.
adoption and the challenge with that. And every new tool you bring in,
Yep.
particularly if you're trying to instill change with this new tool, it's another level of adoption and change. So you're adding complexity and challenges into some maybe challenging situations already. And I think there is a lot of organizations think that they need the newest, greatest tools to look good, to look mature, look like they can scale.
Oh yeah.
But I think that
Yeah.
maturity is more about system and process discipline, not just the newest shiny platforms. And like you said, none of these platforms are any good unless our data is correct and that our
Hmm.
data is consistent. So you've got to invest the right amount of time and effort into making sure that your data from the different sources that it comes from is accurate, correct, and consistent, and that it makes sense. And that investment in your data is probably a really good thing to do really early
Oh
on to
yeah.
make sure your data is correct, even if it is in spreadsheets and Word
Yep.
documents.
I completely agree with that. And with several clients that we've worked with, we've tried to set the expectation that data needs to become a strategic asset, and it's worth investing in that data quality and data discipline around it to create that high quality data. Um, it's tough though, and I think there are, like you say, it's easy to get sucked into the shiny things of the tool. And one of the things I love, I've sat through a lot of vendor demonstrations over the years, and you can tell the ones who are really good and polished, and they make it look so easy. And they're like, here's how it looks, and here's how this is going to make your business process go. And they do it with fake data that they've made up, and they have nice little talk tracks. And it's the perfect world scenario. And then when you look at your organization, which is chaos, data is crap, people aren't aligned, people aren't doing things together, they're siloed in there, it's all going to break down when you try and bring that tool which looks perfect into your chaos. It's not going to work. And I think you and I've talked about chaos doesn't scale. You need to figure out some discipline and structure to get rid of the chaos. And yes, tooling can be much more efficient and effective if you have the right tool at the right time and the right way. But if you're just putting in a tool, it's time and effort to do that. And if you don't address the chaos, you're just going to quickly blame the tool and get rid of it because it doesn't deliver on the promise. And now you've wasted time and the investment and where you need to go. So it is a tough balance. And I think really the more we're talking here, it comes down to, does leadership have the discipline to get their internal act together before they can scale in any capacity, whether through headcount or tooling?
That's the
Um,
key thing. And I think that brings me to another question though. I mean, what if we look at these changes and being more efficient, how do SaaS leaders rethink success metrics? What are some
yeah.
of the metrics that we should be looking at that we've perhaps historically looked at the wrong way?
That's such an important thing. If we're going to really look at different incentives and rewards, what does good look like? What does success look like? And I think one of the ones, and look forward to your thoughts on this, is really rethinking our pipeline and saying, oh, here's how much new business we can close and we can get in there without really solving the churn issue that's been so huge for everyone. Like how much is going out the back door because we don't have our act together, because we have these silos that are impacting the customer experience, because we're not servicing our customers well, or we're bringing them in at all costs, but we haven't done it in a way that makes them want to stay. And I think as long as your marketing and sales team is just focused on land that initial new logo and not on, how do I make sure these logos are going to stay for 3, 5, 7 years? Um, you're always going to be fighting a losing battle there. But what are your thoughts on that one? What do you see?
I that's a really key one. So I think it's less about volume and more about quality, and that requires a
Mhm.
mind shift change. It's not just about landing numbers. And again, we've got to look at compensation plans. You want to, I want customers to stay for a long time, not just reward that initial deal, that initial period. I want them to stay and get value over a longer term for us. So I think you've also got to
Yep.
look at the right metrics are customer lifetime value and seeing a growth in that lifetime value versus initial win, Q1 numbers, logo counts. I think that's really important. And then
Yep.
I think the other big thing, and this is for customer success, is rather than just look at activity, number of meetings, customer value reviews, QBRs, your traditional metrics, start looking at time to value, how quickly are we
Hmm.
getting value for our customers, and then value realization, what value are our customers getting it, and is the value that we're delivering growing? And that means that we have to understand right from the sales process through to the whole business, what does value look like? So understanding a measure of value realization and how efficiently we're delivering value, I think is really, really
Hmm.
key. And I think what we're going to see now, and you're seeing this now, is that the best organizations out there are starting to better reward efficiency and retention and not just that top line growth. And I think that's the big shift that we're seeing happening. It's not there yet
Hmm.
fully, but that's the change that we're going to see.
I think you're right about that one. And people give a lot of lip service to value, and I don't think people fully internalize what that means yet for a SaaS vendor. And trying to get into the mindset of, we're not selling features and functions as a SaaS vendor. We are renting business outcomes to our customers. And if they're not getting those, they're not going to pay the rent. And kind of like high end real estate, you can rent out a multi-million-dollar apartment, and people will pay a premium for what they're looking to get if they're getting that value and if they
Yep.
perceive it as value. And you can rent out something that's really low rent, that's not going to create much value, that some people will pay for that as well too, but they're going to move on as quickly as they can. So it's really sort of that different perception here about what that needs to look like.
I think that's so right. I think this is a great conversation, this Jason, one that we've I think if you look at our recent episodes about customer success in crisis, there's a lot of
Mhm.
overlaps with there. So I'd really encourage
Yep.
our listeners to listen to those as well. What I'd say though, I mean, the breakthrough challenge for our listeners really is try and find or look for one metric or even one behavior in your organization that rewards kind of speed over sustainability today and flip it. So how do you change that around to doing what we need to do? And if you celebrate new deals more than renewals, how can you fix that? If you reward activities more than outcomes for customers, again, flip it. What can you do there? And I think, as we've said, the real growth in SaaS, what we're looking for is that sustainable growth. I think this is a great conversation, this, and it's not about doing less, it's just about doing what matters most and most for our customers as well.
Absolutely. That's a great one. Well, Jason, thank you so much for this episode, and I'm looking forward to the next one. Thanks,
Absolutely.
everyone. Thanks for listening to Breakthrough SaaS Growth with the Jasons. If you found today's episode useful, make sure you subscribe, check out our website at breakthroughsaasgrowth.com, and follow us on all the usual social media channels for more insights and updates. And don't forget to share this show with your colleagues who are driving growth in SaaS. See you next time.